Hi, today is November the 1st and this is the SPX outlook for the coming week. Last week was earnings week. All the FANGs, Facebook, Apple, Amazon, Netflix, Google and even Microsoft posted on average good results. Apple was a little bit disappointing, but as we've seen on Friday, the market recovered. Amazon also. So there may be some indication that the outlook going forward may not be this rosy. GDP posted only a plus 2% year on year, which is not so good. But overall, the bull market is still there. So let's first start with the treasuries. The 2-year, 10-year, 0.48, 1.55 is still stable. The 5-year, 30-year is also stable. So even though we need to have a look at this on a regular basis, there's no particular tension here at the moment. If we look at the VIX term structure, because as options traders, market neutral traders, let me reiterate that once more, is that we are basically volatility trader, and the VIX is maybe holding around 16 or above 16. The front month contango is still strong, plus 12%. So there's no immediate concern, even though we know that this front month contango can be quite volatile. So now let's go to the chart itself. This is a 4-hour chart on SPX, and we see that we have a massive bull run. The market is now going way above the 1-hour chart resistance. Now it's 46.26, and it's rising relentlessly, which shows that there is probably no concern whatsoever about the Fed on Wednesday with the FOMC. They will announce some very mild tapering over the next 6 to 8 months, and a rate hike is still probably late 2022, maybe 2023. So unless the stance of the Fed changes, the markets are definitely anticipating a dovish Fed. So the market is just crazily going bullish, and as I've said before, we can only go with the flow. This is sometimes concerning for our positions, but we're going to look at the next video on the current trades and see how we can deal with this. The market, this kind of trend is hardly sustainable. There should be some correction at some point, but there's no statistical evidence that it has to happen anytime soon. So we will wait for Wednesday. Maybe there will be a reaction. Could be quite an abrupt one, either up or down. So we may see the market aiming straight for 46.80 or so, or we may get back to the former range between 45.60 and 4600. So at this time, again, we can only go with the flow. The market may be irrational, exuberant. There's nothing we can do about this. I need to do this almost on a daily basis. This is the all-time highs. And as far as the volumes are basically just a drip since the futures market reopened. So maybe this bull run is a fake breakout. But we can't ignore the fact that this is a FANG-driven market. Whatever money goes to the large stakes affects the Dow Jones, the Nasdaq, and SPX. So now let's go to the longer time frame, and here we see that the market is incredibly bullish. I could actually plot a fib pattern from here. Here we see that we had a resistance here. The next resistance is actually very, very high on 47.87. So let's keep this in the background. Here on the daily chart, we have a strong resistance on 46.85. So let's say that the chance of the market will keep grinding up to that level. Now for today, we move on to the daily chart. On this daily chart, we see that we still have a 46.10 resistance, but in pre-market trading overnight, it looks like the 46.10 was tested for support, and this can explain why the market is moving higher. This type of upward channel is sustainable. I mean, we have to accept the fact that the market can keep grinding up, and this line may actually shoot up to either 46.50 or, as per higher time frame, 46.85. So there's no real indication the market will retrace to the bottom of this channel. That can happen. Of course, Wednesday will be definitely a very volatile day with FOMC, especially if the Fed proves to be more hawkish than the market is expecting. Okay, that is it for now. As usual, on my Slack channel, we'll have 2 updates, one around 2:30, 3 a.m. Eastern, and the one just before market open. Thank you for watching, and bye for now.